So, buying apartments, people kind of get stuck on a few things. And when you're looking to do this, people get stuck on, where do you get started? How do you do this? How do you even find capital, the money? How do you find deals? All the above. And, why is it so challenging? People, they get caught up in their own mindsets on how they get started in this and what they're doing. So here's kind of my promise to you for tonight. How to buy a 10 to 30 unit apartment building in the next 90 days with $20,000 out of pocket. Because, there's a lot of people out there that try and teach the method of going out there and, buying big deals, 100+ unit deals, all of that stuff. And, trying to go too big too soon and not focusing really on, how do you get started with limited capital and get into your first kind of 5+ unit deal anywhere in the United States, primarily Midwest, states and or states outside of the coastal zones. But how can you do it? And so my promise to you tonight over the next, 30, 45 minutes is to show you how you can buy a 10 to 30 unit apartment deal in the next 90 days with $20,000 out of your pocket. Okay, $20,000 out of your pocket. So full disclaimer, you're definitely not going to become an overnight success, rich story and become a millionaire by getting one apartment building. But you are setting the stage for you, for your family, for your future self. And I think that's the goal. And in 2008, when I got started, I was just trying to survive the financial crisis and help my dad out because what was going on during 2008, if anybody remembers, was pretty wild. What I know is I wanted to become a millionaire. And I knew that, if you break it out on a daily basis, to become a millionaire, it's $2,379 a day. And you can back into that. And you kind of begin with the end and you back into that number to kind of say, okay, if I wanted to make $1 million in a year, like what would that really come down to on a daily basis? And that's it. And then currently today, I own nearly 1,000 units and over $180 million in real estate, but it started with one condo. And I'm going to show you that in here in just a minute. And my goal is to get to $1 billion in assets and 10,000 units. Some stories were written during that financial crisis timeframe, and there's a little Justin there working with my dad at that time. But I came up in real estate a little bit. People have different upbringings and where they start at, but nothing special. I didn't really understand the apartment game. I didn't have any major expert experience in it, but I did kind of come around it in terms of just real estate in general and kind of learning from my dad, my grandmother at that time, and understanding kind of, how to take any kind of property and improve it. And from that, you can either sell it or you can rent it out and you get cash flow or you get big pops of capital. But during the financial crisis, like I was saying, is helping my dad out and walking him through that process and watching what he had to go through, major bankruptcy for our family, for him, for everybody. Did anybody have to file bankruptcy during that time? I mean, you don't have to admit it, but or go through a lot of tough financial times, losing houses and stuff during that as well. You can imagine. But that's what I realized is like, this is the time. And even though I didn't have any money really, I knew we had to buy property. And this entire thing for us, it started with one condo. I mean, think about that. One condo, $100,000 condo, put $25,000 down, had a $75,000 loan, cash flowed that thing at about $570 a month, which think about it, that's like a 27% cash on cash return. It's not a ton of money, but $570 a month on $25,000 down, it's pretty good. It's pretty good. Even though it was small money, it still meant a lot to us because it was a starting point and it was one condo. I like to be sometimes self-deprecating as to, where you start in life. The kind of watching my time frame from the 2008 financial crisis and the collapse, and then 2008 through 2010, becoming an asset manager for a lot of the major banks, helping out, hiring realtors, hiring people, doing all this stuff, watching all this chaos happen in the marketplace on the other side of the computer screen as an asset manager for the banks. But then in 2010 to 2020, about a 10-year run, I was a real estate broker. But I knew we also had to buy property at that time too. So that's kind of when that started, right? Getting to that first condo, going from that point, then moving on to more units and so forth. But I always try and remember my realtor days and showcase sometimes some self-deprecating moments, maybe some bloopers of those days to kind of remind you of where you came from and where you're trying to go. So for fun tonight, I share this. So I hope you enjoy it. Family home in North Pacific Beach at a fantastic value. Let's do that again. Good? Yeah. Check. Is this thing in check or in? Yeah, okay. Hi, this is Justin Brennan with no HOAs. You're in between Pacific Beach and La Jolla. It's a good family home. Can you check this out? Good location, great neighborhood, and that's pretty much it. Put the message me button below, and I'll get right back to you.
Any other final things you want to throw in there?
Although I'm sweating like a dog right now. Wow. I hope you got a kick out of that. Anybody enjoy that one? At least give me some thumbs up in the chat, because for me to put that up there, I almost didn't want to do that tonight. But I figured, what better way to humble yourself than to show some bloopers from back in the day. 10 plus films, actually that was 2014 when that video was filmed, if I'm not mistaken. So that's, heck, 10, 11 years ago. 10, 11 years ago. But once again, going from one unit in 2010, a condo, to 2018, right? 2018, going from that to now 20 units and $3.5 million of assets. And we thought we'd made it, right? We go from one unit to 20 units and $3.5 million, and most of it's with our own money, right? Most of it's with our own money, like a lot of people do, because you don't understand the game of OPM, other people's money, and in combining yours with others. You don't understand the game of money yet either. But we had to learn it because we wanted to grow. Like for us and for me, this was great, but I wanted more, and we wanted more with our company. And so I had to learn this game. I had to learn how to syndicate, how to grow, how to raise money. But I also had to get through some limiting beliefs too. And a lot of people do. And we're going to go over that tonight. And I'd say the top three that most people deal with, we're going to talk about, because it's probably the top three that you're dealing with. Is you're kind of looking at, hey, is multifamily right for me? Is this the game I want to get into? Or is it something else? But we're going to go through that here. So from 2018 and 20 units, you can watch how, this is kind of how it works. You take 20 units, and then just a few years later, here we are in 2025, and even in 2024, nearly 1,000 units and $180 million in assets. So it takes us, 10 plus years to get to 20 units. And then it takes us, call it 6 years or less, to go from 20 to just under 1,000 and 180 million. How does that happen? How does that happen? Because it doesn't happen by you trying to do it alone. It doesn't happen by you trying to just do it with your own money. It doesn't happen by keeping a limiting belief system and limiting mindset. And so that's kind of what I want to chat on now, because I think this is really, really, really important for people to understand, is the mindset game. The mindset game. So how can you buy a 10 to 30 unit apartment building in the next 90 days with $20,000 out of pocket? You have to get over some belief systems. You have to get over the belief number one, which is probably one of the biggest ones, is that you need a lot of money to get started. Limiting belief number two, that multifamily is too complex and only the experts can get into it. And you have to have a background in it or a history in it, or you have to be an expert in it. Okay, we're going to talk about that, and we're going to debunk that tonight. And I'd say the third biggest limiting belief is that deals are hard to find. Deals are hard to find, and it's oversaturated. It's oversaturated. So let's start with the false belief number one, that you need a lot of capital and a lot of money to get started. You need a lot of capital and money to get started. No, you don't. And here's why. Let's take an example of a 20-unit deal. We're just going to say this is a 20-unit deal, and we're buying it for $1.5 million. We're going to renovate the property, put $100,000 into it, and closing costs of 100 or 50 grand. So we're going to be all in. Our total cost in the deal is $1.65 million. Is everybody tracking me? So now we got to go out and we got to get a loan and we have to bring in the down payment, the equity. So let's kind of show you how that works. So unlike residential, where you're getting loans on residential properties, when you get into the commercial game, multifamily, getting $1.1 million loan is easier than getting a $200,000 house loan. No longer, I mean, you go buy a rental, you go buy a residential property. What does the bank do when they're giving you a loan? Right? They dissect you inside and out. I mean, you're getting anything and everything you can imagine, you're getting dissected. And when you do a commercial property, it's not that way. They're basing it on the income of the property and the income that that property produces. So if the property produces enough income, they're going to give you the loan. As long as you're not a fraud and you have a credit score probably over 600, you're not going to have that much of a problem getting that loan. So now you talk about the equity, the down payment. So in this case, for this property, it's 30%. You get a 70% loan, 30% down payment. That's 500 grand. Now, for most people here, you're probably saying, well, I don't have 500 grand to put down by myself. I know you don't, and most people don't. When I did my first deal, I didn't either. And I'm going to break that deal down for you here too. So you're going to be coming in with about 10% of the money, about 50 grand in this case. And then the OPM, other people's money, that comes in many forms. It's not just friends and family. It's not just raising capital. It could be seller financing. It could be creative financing. It could be a private lender. It could be our community of multifamily schools. It can be all the above. OPM comes in many different forms, okay? Many different forms. It's not just, hey, go out and raise a bunch of money from people. People get stuck with that. OPM is many different forms, okay? So that $495,000, that's 90% of the money that comes in from other sources, okay? And we teach that, we coach that, we hold your hand through that. That's the whole crux of the entire deal, okay? But here's the cool thing. You think you're going to have to come out of pocket with 50 grand. That's 10% of the money. What you don't realize is that you get paid multiple ways when you do multifamily. One of them is kind of going in the door, right? Going in the door, when you put these types of things together, you get what's called an acquisition fee, okay? So you're coming in with 10% of the money, but you're getting 40% of the deal. And you get an acquisition fee literally at the close of escrow, day one, of $30,000. So you're not out of pocket 50 grand. You're really out of pocket $20,000. Yes, on the OPM, there you go. 40% of what? 40% of the deal. 40% of the profits, 40% of the cash flow, 40% of everything. Okay, for 10% of the money. 10% of the money, Gino. That gets you 40% of the deal. And then you're getting that. One of the ways you get paid going in the door is an acquisition fee. So the point I'm trying to make is you're out of pocket. So think about this for a minute. You're going to have control and ownership and decision-making power over a 20-unit apartment building, $1.5 million plus property for $20,000 out of your pocket. Does that sound like something exciting? Because I just now showed you how you can go get a 10 to 30 unit apartment deal, okay, in the next 90 days with $20,000 out of pocket. And that's exactly how you do it. Now, the next step becomes, okay, raising money and the nuance of that and the process of that, okay? Obviously, we get into that. And that's a process you have to learn and grab a hold of, and we do that, okay? But this is a key component. So the belief number one that you need a lot of money. So if you found, let me ask you this question. If you found a 20-unit deal today, in the next week, in the next 90 days, could you get access to $20,000 to $50,000 to do a deal like this that I just showed you? To come in with $20,000 to $50,000, get 40% of the deal, get an acquisition fee for $30,000, and then you're also getting paid 5 to 8 ways that we're going to show you. So that belief system that a lot of people have that you need a lot of capital, bye-bye. You just don't. You just need to know how to do it the right way. You need to know how to do it the right way. Okay? Beautiful. So let's jump into belief system number 2, because this is one of my favorites. Because I got caught up in this in imposter syndrome that you in multifamily, it's too complex. Because I didn't know. When I got started, guys, when I got started with one condo and then we went to 20 units, and then from that point at 20 units where we wanted to go and grow and scale, I had to learn the complexity of the game. And I got caught up thinking it's too complex, that I wasn't smart enough. The whole thing's of imposter syndrome. And then I ended up going out to a syndication conference in Boston sitting with about 3,000 other people in a conference room, like a lot of people have done, maybe even in here. And you start to realize, man, like if these people can do it, like I can do it. If these people can do it, I can do it. And that's kind of what got us going and got us skyrocketing and me going home and saying, I can do this. I can do this. And part of a community is all these people can do it too. I mean, these are all just pictures and stuff of people that are in our multifamily schooled community that have realized, no, it's not too complex. And these people have all walks of life. And I'm going to show you some of them, all different walks of life. People starting at totally different starting points. Some people in real estate, some people not. All the above, okay? But the belief system that it's too complex and experts only is just not accurate because everybody has to start somewhere. Everybody has to start somewhere. So I love that. The process, it may seem intimidating at first, but it's really about following a step-by-step blueprint rather than knowing every intricate detail of the financing and the laws and all that stuff, right? You need something that breaks down every single thing step by step into actionable, understandable parts that are empowering you to navigate the market confidently, even if you're just starting from scratch, to keep things in layman's terms. And so to give you a good idea of that, I'm going to show you Akis because she's a perfect example of many that English is a second language for her. And she got started. She's in the medical field. She had no real estate experience at all, but this is her feel on it.
So as soon as I listened to the crash course, I got hooked. It was so funny because that one is a small course. Yeah. However, I think I shared with you before that one of the parts that I enjoy the most is that you simplify language for many of us, and English is my second language. So I really enjoy the way that you were teaching and
you're saying and being able to kind of explain the complex details and nuance in a layman's terms, simple format to where it actually resonates. Is that what I'm gathering?
Correct, because there is a lot of terminology out there for real estate that seems very intimidating, especially for those who are new to the real estate investment business. And you made it so easy and simplify it in a way that for me resonates. It reminded me a little bit of the Rich Dad Poor Dad book. It's like that.
I mean, I will take that compliment. Very, very good.
So I love stuff like that. And then you take Steve, he's a contractor in the upper Midwest. His first deal was a 39-unit deal in Cleveland, Ohio. So it's not too complex for a contractor either.
Super stoked for you. Everybody give Steve a clap.
So 39 units, that was the Cleveland deal we were talking about. How many stories is that thing?
It's 4 stories, a little over 40,000 square feet with 4,000 square feet of commercial space.
Right.
It's very challenging project.
Is that the one you're getting the tax advantages on and all that stuff too?
Senior tax, 100% tax abate.
You got 100% tax abatement on that property, which is incredible. Cleveland, Ohio, it's an opportunity zone. He's able to find that inside the community with everybody else, but he's a contractor, had no multifamily real estate experience whatsoever, other than being around construction most of his life. And that's Steve. And then you have Brian. This is one of my favorites. So he just closed on a 22-unit deal, lives in Los Angeles, has a dog walking business, okay? Dog walking and training business. Closed on his first 22-unit deal in Oklahoma. It's not too complex for him either. Gotta love dog walking. I mean, how many of you in here, and I want you to ask yourself this question. It's December 31st, 2025. Okay, here we are ending February. It's December 31st, 2025. How amazing would it feel to have one or two 10 to 30 unit apartment deals done, dusted in your portfolio by the end of the year? What would that do for you? Chime in the chat what that would do for you, your family, maybe how your spouse, your kids look up at you, what you're trying to accomplish for your family. I'm curious because that's really what it's all about. Okay, that's what it's all about. And anybody can do this, but it's getting over some of these belief systems that stop us, thinking you need too much money or too much capital, thinking it's too complex. I'm showing you people right now that are doing this. I mean, take, for example, even Ken McElroy. Does anybody know who Ken McElroy is here? He's not some genius. Okay, he bought his first investment property in 1990 while he was a freshman in college. No previous real estate experience. Okay, no previous real estate experience. Today, he has $3 billion in apartments and over 9,000 units in 5 states. And he's regarded as one of the best gurus, call it, in the industry today. Okay, in the industry today. Do any of these faces resonate? Does anybody know these faces? Chime in the chat. If you know Brandon Turner, apartment rock star, Mr. Robert Martinez, Ryan Pineda. Then you got Carlos Reyes over here, killer guy. Mr. Uncle G over there, if you know them, all of them. Okay. None of these people were experts. None of them. I mean, you could even take Grant Cardone, right? Like him or not. He grew up in Louisiana, started flipping rental properties in Houston, moved to California, got into his first deals there. But he started with one rental in Houston and flipping houses in Houston. And then went into multifamily out of San Diego to start, but then grew his portfolio where it's at today. But he was not a real estate expert. He was a car salesman coach. So anybody can do it. It's just getting over a couple belief systems in your mind. Okay, a couple belief systems in your mind. So let's take that second belief that multifamily is too complex and it's for experts only, and we need to crush that. Okay, so we've crushed the one that you don't need a lot of capital. We've crushed the one that it's too complex and you can do it. And now you kind of get to the third belief system, that deals are hard to find and that the market is oversaturated. You know, Jeff, funny enough, my first syndication conference was at a Dave Lindell conference in 2018 in Boston. So I don't know him personally, but I know of him. And Jeff, yeah, there's deals everywhere, especially now. It's just having access and understanding how to get access to the deals and how to find them, And we're going to crush that belief system for you here tonight too. Okay, because we have tools and resources and everything for anybody to accomplish it. But the deals are, you just have to know how to get to them and how to find them and how deals come about in the marketplace, okay? How they come about in the marketplace. You went to his workshop last October. Love that. So actually, let me go back here real quick because I think it's important for everybody to know that there's 2 ways you find deals. You go direct to the brokers, who are kind of the gatekeepers in the deals, or you go direct to the owners. Does anybody know of any other ways to find deals? Either direct to broker or direct to the sellers or owners of the properties. But these are the only 2 ways you can find deals in the marketplace. It's the only 2 ways. Here's the biggest thing. If you do it alone, the deals are hard to find. If you do this alone, the deals are hard to find. I'm going to repeat that one more time. If you do it alone, the deals are hard to find. You have to do it with a couple tools and couple options. You have to realize that collaboration and partnerships are how things get done. Real estate investing, period, but even more so in the multifamily game. Okay, even more so in the multifamily game. So let's talk about the 2 approaches. Okay, and I would say this to you. What if you found a community of other investors doing deals around the United States where you could learn the insider techniques to equip you with the skills to uncover off-market gems by using brokers' on-market listings, where you could see the deals that others miss, proving that the market is ripe and it's ripe with potential. You just need to be a prepared investor and don't do it alone. Okay, so what if that, right? What if you found a community? What would that do for everybody in here if you had a location and a way to find pre-market and off-market deals direct to broker through a community? Would that be of value? And then the other part is, what if you had a software that was specifically dedicated to finding pre-market and off-market deals anywhere in all 50 states around the country? Would that be of value? Would that be of value? So now you have direct to broker. So we're solving that resource and problem and how to get to that. And then the number 2 approach is the direct to owner. Pre-market, off-market deals direct to the owners, and having a resource that'll identify, find, analyze, help finance, and put those deals together in a pre-market setting using a software. Because that's a key component to it all, is being able to locate the deals. How do you get access to them? How do you go through the nuance of the entire process? And there's 2 ways to do it: direct to broker or direct to seller. And we can help solve both of those, okay? Because that's how you're going to get access to the most deals in the marketplace. So the belief system that deals are hard to find and the market is oversaturated, it is if you do it alone. It is if you do it alone. But if you do it in a community, you can solve that problem. If you do it with other like-minded investors doing things around the country, you can solve that problem. You need to do it together. So it's not about doing things alone. The things are not saturated. Deals are not hard to find. They're hard to find if you do it alone. You need to do it together. And having accountability with that too. A lot of times, we get excited about things. Like even if we jump into programs or communities or doing things, we get excited about it. We jump in, but we can lose our momentum. We can lose our motivation because we're not disciplined, number 1. Number 2, because we don't have accountability through a community. We don't have hand-holding and people kind of pushing us along to call out our BS. And that's a key component. That's why you do it, because there's times when you don't want to continue. There's times where you hit resistance. And I'm going to tell you right now, if every single time you hit resistance, you want to quit, no wonder we don't get anywhere. I mean, I've dealt with that all the time. But that's why you need to have your bigger purpose, your bigger why. And if it's family, if it's your kids, if it's doing it because you aspire for them to look up to you, maybe they're not looking up to you. Maybe you're underachieving in life. I have the feeling all the time of underachieving. And I feel like that pushes me, because the last thing I want to do is be 80 years old sitting on my deathbed having a conversation with my 40-year-old self, telling that person, dude, I'm sorry. I'm sorry I didn't go for it. I didn't jump off the cliff. I didn't make things happen. I was too scared, right? I was too scared of taking risks. I was too scared that I was going to fail. I was too scared of losing money. I was too scared I wasn't good enough. I was too scared I didn't have enough money, right? All the limiting beliefs that we create in our own brain cells, you can do it every day. Do it every day. And it stops most of us from moving forward. So let's take a look at this. Single family versus multifamily. The greatest thing about multifamily and why you do this is for the monthly cash flows and then the profits, right? The revenue you get from a sale or a refinance, okay? But did you know that while you own the building and the property, you're getting paid 5 to 8 different ways, right? 5 to 8 different ways. And there's less risk, Jeff. You hit the nail on the head. There's less risk in multifamily because you have economies of scale that are diversified. Give you a perfect example. Let's go say you buy a single family rental property, one single family rental that has one tenant in it. What happens if that tenant moves out? Do you go to 90% occupied? Do you go to having some revenue? No, you go from 100 to 0 overnight. So now you have to go fill that place up. But meanwhile, turning it over, getting it ready, doing it with all that, you have 0 revenue coming in. In multifamily, if you have a 10-unit building, one tenant moves out, you go from 100% to 90% occupied. You're still paying the rent, covering your expenses, sleeping well at night, still cash flowing, putting money in your pocket for you and your family, and you're not having to deal with all the BS that comes along with a lot of single-family rentals, okay? And you're getting paid multiple ways. One of them is the acquisition fee. right? We talked about this. First thing is the acquisition fee going in the door, right? So this thing right here. And then on top of that, you get asset management fees for managing the deal. So asset management fees are for managing the managers. So you hire third-party property managers, and then you get paid an asset management fee for managing the managers, okay? You're also getting all these tax benefits that are huge, right? They're huge when you get into the commercial game. Then you get a fee when you sell the property. You can get finder's fee for just finding good deals, okay? Then you can get construction management fees. So all these different ways to get paid. That's the whole point behind it. It's not just one way. There's multiple ways, and you're getting cash flow and distributions and everything throughout the entire ownership cycle of owning that property, okay? That's why it's key. That's why it's key. So let me show you this. A little case study for you. This is an actual 31-unit deal that we did. And for $19,000 out of pocket, I had control and ownership, 40% ownership of this 31-unit deal. Here's how it worked. We bought this thing for $1,525,000. We put in about $400,000 in renovation dollars. We had closing costs of about $225,000. So we were all in. Our all-in cost on this thing was $2.1 million bucks. So we went out and we got a $1.5 million loan. That was about a 70% loan. Remember the deal I was showing you earlier? Breaking that down? Very similar. $1.5 million loan. It was easier to get that $1.5 million loan, everybody, than it was to go get a $200,000 house loan, because they were using the property's financials and the property's income to substantiate that loan payment every month. It wasn't about me personally. It was about the property. That's why it's easier to get. So now we had a down payment we had to bring in around $645,000. I brought in this 10%, $64,000, 90%. So in this case, remember I said the OPM comes from many sources. In this particular case, the OPM came from about 5 to 7 people. I think we had about 7 investors in this deal. And because the deal made such good financial sense, raising that money was not hard. It's hard to raise money if your deal stinks. If your deal makes good financial sense, it's easy to raise money. It's easy to bring in OPM. It's easy to go find seller financing. It's easy to find investor money. It's easy to find friends and family that may want to invest in it. It's easy to find a private lender who want to come in with this $581,000. You come in with this. But here's the cool thing, okay? Now with that, now I got an acquisition fee. So a $45,000 acquisition fee for coming in that deal. So my out-of-pocket was $19,000. 19 grand. And now I had control of a 31 unit. I had decision-making power over a 31 unit. I was controlling it for $19,000 out of pocket. I mean, does this sound crazy to anybody, or does it sound crazy? You can chime in. Because most people, they're like, what? Yes, but this is how it works, guys. This is how it works. And like you said, Jeff, it's forced appreciation. So what did I get? On this 31 unit, what did I get? 24 months later after buying this property, we went out and we got a new loan on it, because now the value of the property was $3.6 million, okay? $3.6 million. So we went out and got a 70% loan. Carlos, answering that question, how did you get a 40% control? Because I was the general partner on the deal. I found the deal. I put it together. I helped run the entire thing. So because of that, I get 40% of the deal for bringing in 10% of the money. I'm the person putting it together. That's the whole point of this thing tonight, is you are what's called syndicating a deal. You're putting it together. You're the one that found it, organized it, put it together, running it, asset managing it. So for that, you get paid handsomely. You get paid well. You get 40% of the deal for bringing in 10% of the money. What does a finder's fee come out of? It would come out of the closing cost of the deal, Austin. Bait, you'd ask, did you have to syndicate for 7 private lenders, or are they hard money lenders? No, there were 7 friends and family on that particular deal. On this particular deal was 7 friends and family that came in on the deal. Yep. And then Kevin was chiming in there that the general partner percentage depends on the syndication, but typically it's 30 to 40%. That's right. Is there an acceptable formula, you'd ask, for syndication? Split ratios. Yeah, typically 30 to 40%. So 70% would go to your investors, 30 to 40% would go to you. That's a pretty typical formula, just FYI. Okay. So we go out and we get a new loan on it. $2.5 million loan. So that's what we pulled out. We paid off the $1.5 million loan, right? The $1.5 million loan that we took out here. Remember we took out a $1.5 million loan here? So we paid that loan off. We paid back the $645,000 that we brought into the deal for everybody. We paid that off, and we pocketed $350,000. That's tax-free money, by the way. Tax-free money. No income tax on that. That's the beauty of loans, which is why there's good debt and bad debt. Good debt is this debt. Bad debt is credit cards. Okay? Keep in mind, I also got an asset management fee paid to me monthly of 1%. So I'm getting that income. Then I'm getting 40% of the profits and 40% of the cash flows on the deal. So I'm making $2,000 a month over a 5-year window. That's $120,000. Then my net profits from the sale, $470,000. So at the end of the day, I made $590,000 on $19,000 out of pocket. That's a 32x on my money. And Carlos, no, you do not need the 1031 exchange. And bait, yes, you could do a 506B or a 506C offering. That's correct. And you would do a partnership on that, Blake. A bait partnership. Christian, yes. Your head just blew off. Yeah, most people's heads blow off. Because, I mean, listen, you're not in this game to make little money. Okay? You're not here to make pennies. You're here to solve $1 million problems. And when you solve $1 million problems, you get paid millions of dollars. If you go solve $1,000 problems, you make thousands of dollars. If you solve a $100,000 problem, you make hundreds of thousands. Okay? When you solve big problems, you make big money. You're solving big problems for investors. You're solving big problems for people. You're moving a lot of money here when you do these types of deals. So that's why you get paid handsomely. Okay? So how open do you find these deals? When you say how open do you find the deals, Oscar, what do you mean by that? How hard is it to find them? So as I mentioned earlier, there's 2 ways to find deals, Oscar. Direct to broker or direct to owner. Direct to broker or direct to owner. And the way you solve those 2 problems is a community, partnerships where you can collaborate to find the deals. So you know the process of getting access to the brokers in their pre-market inventory to get access to the good deals. That's option A. Or option B, like I said, a software. And I'd asked everybody here, would a software make sense? If you had a great software that helped you find pre-market deals direct to sellers, would that be valuable? That's how you find the deals. It's one of the 2 approaches. But that is an actual case study on a deal. It's an actual case study of a deal that I did. And we do them just like that all the time. All those deals I showed you previously that all of our students have done, they structured them the exact same ways. Steve, Brian, Akis, all of them. All structured the exact same way. There's nothing sexy about it. It's just they had to learn the process. They had to jump in. They had to get over the complex belief that it's too complex. And they had to believe in it. Okay? So I said earlier, I said, listen, my promise to you tonight was that I was going to solve and show you how you can buy a 10 to 30 unit apartment deal in the next 90 days with $20,000 out of pocket. $20,000 out of pocket. And on top of that, solve some limiting beliefs and these false beliefs that I need a lot of money, right? It takes a lot of money to do these things. And that multifamily is too complex and it's for experts only. And that deals are hard to find and the market is oversaturated. So we definitely solved the first one. We showed you how you can do that. And I think we blew up the belief around needing not a lot of money. I showed you how you could do it for $20,000 out of pocket. I also showed you that it's not too complex because a lot of other people that have very little to no experience when they got started, they solved it, they did it, they've executed. And that deals are hard to find. They're only hard to find when you do them alone, when you don't have resources and tools. That's when they're hard. But if you can solve the tool for direct to broker, which we can do, and you can solve the problem with direct to owner, which we can do, now you can find deals and you can get through that. So about 2 years ago, 2.5 years ago now, I had a lot of people approaching me because they saw what I was doing in buying all these multifamily apartment buildings around the country. And they started to ask, like, do you teach this stuff? And initially I said no, because we didn't have anything. And I didn't really want to be like a coach or guru or anything like that. It just wasn't something I'd thought about. But then we started putting some courses that people could take online at their own pace. People loved them because they, like Akis had said, they were just put up in layman's terms. They explained complexity of things in simple grasp, you could grasp them and they made sense. So then people came in closer and they said, hey, well, do you have a community? Do you mentor? Do you hold people's hand through this process to learn it? And I said, no, we don't. And I don't have the time to do one-on-one mentorships. Plus it would cost an arm and a leg. I just couldn't trade that time like that. But I said, what if we could create a community of well-trained investors around the country who could collaborate, partner, find deals together, raise capital, solve each other's problems in that atmosphere, close escrow, and manage deals around the country? Like, how beautiful would that be? And you have investors win-winning all over the place. And then we can help people do it. By doing that, people want to partner on bigger deals. And then by doing that, we get to grow because our portfolio grows. It's a win for us. Your portfolio grows. It's a win for you. All the people I showed you earlier, they're getting into their first, second deals, and now they're wanting to grow and do bigger deals. So now no longer is it a 20 to 30. Now it's a 50 plus. Well, when they do a 50 plus, they want a partner. They want other people. So then we get involved. People partner with us. People partner with other people in the community. So that's where the community and the mentorship came about. So that's huge. And then people said, well, do you have a tool that could gain access to pre-market deals, direct to owner, direct to sellers, and be able to show us all these deals around the country, 150 million different properties and lots around the country, and show us this stuff and give us access, and then be able to give us data that would give us likelihood it's going to sell, that would tell us phone numbers, emails, allow us to skip trace, allow us to pull up all kinds of filters and loan data and everything, and be able to direct market via letters, postcards, all the marketing approaches direct to these people, and do it for multifamily commercial buildings as well as single family buildings anywhere in the United States. So we developed that. So our software, Real Estate Radar, was launched. And it allows us to help people find off-market and pre-market deals.